Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday, the 20th of September. Sometimes the markets just don't make any sense. Commentators tend to think they have to make comments on every single blip in the market. Sometimes it's just not possible to put a handle on a story of what drives a market on any given day. Today may be one of those days when the news that came out was not particularly positive, yet the general market moved higher. That was not the same story for the bank stocks that reflected more the downgrade by Standard & Poor's for Italy overnight. The other negative factor for the market was that the International Monetary Fund, IMF, warned of continued economic weakness. So the market rallies. Like I said earlier, sometimes it's not possible to tell what's going on a day-to-day basis. The only way to really tell what's going on is to look at the big picture, the big trends. And the big trends continue to remain negative for the equity markets and positive for the gold market. Those two factors have not changed as of this writing. We've discussed perception many times before, and this is one of the most powerful elements in any market. Don't underestimate it. One only has to look at the recent example of Netflix to understand how powerful perception can be in the market. In fact, it is one of the stocks we'll be looking at today to show you just how our trade trial technology works and how it can benefit you in the future. Okay, now let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So here we are, we're at my home page, Adam Hewison, you can see right here. And we're going to flip this to our portfolio manager, and I've got that already written up. I'm going to go back to actually here, but you'll see I've got the 6 markets we track, plus I have Netflix. I want to share that with you because it's really been amazing. We're down 9% today, but I want to show you exactly how you could have traded this market using our trade trial technology and our very methodical approach to the markets. You'll be surprised. So let's go to our first market, the S&P 500. And the S&P 500 is, again, rallied up, try to get over these high levels. It may do it later on today, I don't know. But generally speaking, the market is at a high period, and at least we think so. We think this area right here is going to present enough of a problem, enough of a challenge that we're not going to see this market go through. So here we are, we're overbought on the Williams percent R, not to say we can't go higher. And we're still in a positive mode here. And our trade triangles, which I want to share with you, are really kind of mixed. We're basically short long-term from 1258. Intermediate and short-term traders should be out of this market because it's just too choppy to predict right now. We like to be in markets when they have a defined trend like this. And you can make some really good money. And that's going to click in when our intermediate term trade triangle right here, the weekly, turns red. When that happens, we want to be short and catch the move down, because I still think the move is going to go to the 1,000 to 950 area on the S&P 500 index. So let's go to our next market. And the next market is, as always, is going to be silver. And the silver market's interesting because I'm going to put my telestrator here on the screen, and I'll show you what I'm looking at. Basically, we are sort of two things. We're right at the low end of the Donchian trading channel. So we have a cyclic low period, and if you look at this entire period, really you can just sort of draw from here right across. This is just hasn't gone anywhere. Now the question is it going to break out on the upside or on the downside? That's still too early to say, but our longer-term trade triangles, this is what I mentioned before, the long-term trade triangles are still positive on silver from 1874. We're still trading at 39.87, so still some very nice profits there. Longer-term, positive. Short-term, mixed. So we've got a minus 70, which means you should really be looking at this on the Donchian trading channels as well as our Williams percent R indicator. And let's just take this off the screen for a second and scope this down, because I want to show you something that's beginning to form here. And this is what it is. It's a small bullish divergence, and it's not, you can see prices like this going down, yet this is flattened out, so indicating that the momentum, at least for the moment, has stopped going down. Now if we see this market start to come like this, then I think we may need a couple more days like here. But I think eventually we may see this market actually do a little better than it's doing right now. But generally speaking, the trend is up. You've got a small divergence. We are oversold in oversold condition. And the other element that I want to share with you is I think it's the MACD we talked about. we're just beginning to flatten out. You see these prices here, they're flattening out, and sometimes these portend to rise. When you see the momentum start to move up, boom, you cross the line, vice versa, boom, momentum down, and then we are seeing this flatten out. So it's something to pay attention to. I don't advocate buying silver today, but let's pay close attention to it. Let's go to our next market, which is gold, which I think is going to be very, very interesting because it's a little bit different pattern, and I want to share that with you today. So here's the gold market, and it looks the same, but it's different. And let me explain. It looks the same as silver, but it's different. The big thing, the big challenge here is you have a couple of things. One is you have a double top potentially, and that is right here. Right around over 1900, the market stalled out. Double top. This is going to be certainly an area right here of major concern to us, which is the 1700 level. So I'll just put that in. 1700 is major support. And even the 1750 area is an area we think is interim support. So again, we're sort of at the lower end of the Donchian trading channel right now, but also, let me clear this off. I want to share this with you as well. As you scroll this down, you can see that we have this sort of area. The market momentum has stopped going down. If you look at this, we didn't quite make a new low. I'd like to have seen that, but we didn't quite make a new low. But certainly this is flattened out, so there's not a lot of pressure on the downside. Certainly today's action going back over 1800. This is real-time prices you're looking at. And you're looking at this market is beginning to also flatten out. And we want to see this. I think in the next few days, maybe a week or so, we're at a cyclical low period, and this could be a really interesting turning point. And here's the reason I say that, is you've got our monthly trade triangles positive. Unlike silver, our weekly trade triangles are also positive. So this is the stronger of the two metals. And we are waiting for the daily to turn green, which would be an indication that we're going to see this market move high. Now look, we're long from 1557, so even at $1,800 is still a good profit in this position that we got on way back here, and we've held. And the longer one is 1430, which goes back even further. But nonetheless, we want to look at a place to be looking to get long this market again. Now, again, I'm looking at this level very carefully. I would say a move perhaps over the 1830 level would certainly catapult this market into a much different arrangement, and I think we'll go up and challenge the highs of 1900 once again. So let's pay really close attention to this market. Like we talked about with the dollar index, to pay close attention to that. When you pay close attention, you're ready to pull the trigger and move when the signals kick in. So let's go to our next market. And the next market is going to be the crude oil market. And this is a market that's sort of interesting in the sense that it's really the trade triangles are negative longer term, mixed short term. You've got a 75 reading, sort of biased to the downside, but it's really not going anywhere. You're sort of stuck in the middle with a Williams percent R. You're not overbought or oversold either. It's just sort of stuck in the middle. And also, this is just beginning to roll over. So I'd pay close attention to this because this is the Williams percent R is in the middle, but it's not oversold. But the MACD is beginning to roll over. I want to pay close attention to that because we could get a signal to actually get short this market. As hard as it may seem, is that we are looking at this market potentially to go short again. But let's draw a trend line in here because I think this is the important element. It's very similar to the stock market, the index. If we see the market go, I'm just going to draw this in here. If we see this market go below this level, let's say close below 85, I think that's a strong signal we're going to see this market come under more pressure. That's my gut feeling, and that certainly would be looking, if we go below this level here, that would turn our trade triangles once again to the red, meaning all of these indicators here would be negative, indicating we'll see lower levels. But if we're going to judge crude oil on an economic level and the stock market's going lower and things are weak, then prices will probably, supply and demand, come down. Let's see how that plays out. Let's go to our next market. Let me just take this off the screen. And we'll go to our next market. And the next market we're looking at is the dollar index, which we've been very, very excited about. The original breakout point, I'm just going to put a line chart in here. The original breakout point was 76.10. We are still sort of consolidating over this level. We may spend a little more time, but eventually I think we'll see this market move up and out and up to the 80 level in this index. Now you can trade this many ways. There's futures for trading the index. You could take a look at something like the FXE to trade the euro, which I still think is going to go a lot lower. I think maybe one of the trades of the century. I think it's just a matter of time before the euro actually implodes. In my opinion, Greece is going to not pay the money back. That's just not going to happen, at least not in my lifetime or anyone's lifetime, I think. So I think there's a lot of problems still there, and I think the markets are trying, I think the politicians are trying to find a way to massage themselves out of this. I don't think it's going to be possible this time. So let's go to our next market, and the last market we'll be looking at is going to be the CRB index. And then we'll spend time with Netflix. So I'm glad you're just staying with us for this week. I want you to share this thing with Netflix. And here's the scope of this market. We were looking for a move down. We were back up here towards, see, this is what we talk about with the high end of the Donchian trade channel right around here. We've come down, quite a bit, almost 20 points, and we're still not out of the woods yet in this market. So it's indicating that actually inflation is not on the scope of things. And my bias is towards inflation, but the market's telling you no. The market's telling you there's no inflation, and it's going to continue to go down. And if that's the case, and you have crude oil going down to a lower level, let's say $80 to $75 a barrel, that's going to weigh very heavily on this index, and we'll certainly test this level down here, which is around 300. So let's pay close attention. The market is oversold, however. It doesn't mean it can't go lower. The MACD is down, and the other thing that's really all of our trade triangles negative, strong downtrend. This market should be shorted, and you can see the levels. We are short 335, 329, and 333. The market's currently 324. So we put these on. If you watched our show before, you've seen we have these shows, and we tell you where the trade triangles come in, so there's no question about what you do. Plus, with the trade triangles, if you're a member of MarketClub, you know you have access to 3 very powerful, easy to use portfolios. We give you the signals every single day on those portfolios, so you can track them and look at, put them in and basically go and play golf or tennis or whatever you want to do. But you can put the orders in with your broker and then set it and forget it, basically. So let's before I go on to the Netflix, which is the next market, I want to just mention something very personal. When I started my career, gosh, it seems like centuries ago, but when I started I had a mentor, a personal mentor that helped me, who was a member of the exchange, and quite frankly, I was a newbie. I didn't have any idea on how to trade. I just thought it was just a wild sort of casino. But there's a beautiful logic and sequence that goes into the markets that you really, really need to learn. And once you learn this skill, and that's why we're offering one-on-one MarketClub personal coaching. Once you learn this skill, you really are set for life. It really, you don't have to listen to. You don't have to listen to me anymore. You don't have to listen to anybody, because the reality is you know how to do it yourself, and that's the important thing. It's just so much easier and gives you so much confidence. In any market you look at, you'll be able to do that. So give us a call today, 1-877-219-1482. So let's go back to our portfolio, and let's take a look at Netflix, which is the next market. Now, here's Netflix, and we're going back, and as you can see, all of our trade triangles are negative. But look at the prices. I'm going to share this with you because I've got my telestrator on here, and we're going to just draw some things on the screen. So here's the all-time high for Netflix right here. Okay? Now, no one's going to get out of the top. We've said that before. You're not going to sell the top. It's just not possible. You're not going to buy the bottom. Certainly with our program, you're not going to do it. And if anybody tells you that's what they do, run the other way, because it just doesn't exist. I've been in this long enough to understand it just does not exist. So here's our first signal. This is a weekly signal that was meaning get out of long positions, and you can see that came in at 270.55. Now we're trading at 131 right now. And here's the monthly signal which it came in, and that came in at 225. Now again, this is perception. This is before they announced their new data plan, and when they announced that, it was clearly the market knew something. And this is what I'm mentioning to you. Clearly, the market knew something was up before the announcement came out. And this is what I preach to everyone: is the market knows. This is the sum total of everyone's knowledge. Someone has inside knowledge that they can only share with you when they make a trade in the marketplace, and that when you track the markets, then you know what is going on. Now, wouldn't you like to be, one, if you had Netflix in your portfolio, wouldn't you like to be just out of the market? And two, wouldn't you like to be short Netflix based on our trade triangle technology? Because we both trade on the long side and the short side, and that's the key thing. The trade triangles will help you immensely stay on the right side of the market. So, hey, this is Adam Hewison. Thanks for stopping by. As always, I enjoy it. Tomorrow's our show at 5 p.m. We also have a 1 p.m. update for you. Don't miss that. So till tomorrow, have a great trading day.